The Nifty Smallcap Index may have recovered about 85% from its 52-week low and has now, less than 5 to 6% away from its 52-week high. However, despite all of this outperformance that we have seen in the recent few weeks, it is still trading more than 35% below its lifetime high, which was hit in Jan 2018. Remember that the broader market indices were in a bear market ever since Jan 2018, with the small cap index declining as much as 66 to 67%. That's the kind of drawdown that we had seen from the peak to this year's low itself. But with the recovery that we've had in the recent times, the key question to ask is the slumber for the mid caps and the small caps over? Well, there are a few data points that I want to highlight in order to answer that question. One is the ratio of the small cap to the large cap space. If you have a look at that chart, the ratio of the small cap index to the Nifty index currently stands at 0.5 times, which is the highest level that we have seen in 2020. However, if you compare this to the peak that we had, which was 0.9 times, we are still considerable way from the top as well, which indicates that there could be some further outperformance by the broader market indices as well. Moving on, to the valuations of the small cap space, let's address that as well, which is the second part of the question as well. Currently, the small cap index trades at an estimated price to earnings multiple of about 16.5 times, which is slightly more than the long-term average since 2012 that we've seen at about 12.5 to 13 odd times. And this 16.5 times is also just above the one standard deviation above the long-term mean. However, if you plot the chart and look at it, on a long-term basis, there have been instances where the small cap index has traded 2 standard deviations above and even 3 standard deviations above the mean that we've had. So that stands at about 18 to 21 times. So in terms of that also, there is scope for some bit of upside for the small cap space as well. Now, talking about the recovery that we have seen from this year's low itself, there have been some outperforming stocks, and the ones that have contributed the most, let's address those as well. You have Welspun India along with Procter, P&G Health, which have which are just less than 1% away from their 52-week high, along with Radico Khaitan as well. Remember that the stock has been buzzing in the last couple of days as well. Some of the other stocks, the likes of Infibeam, First Source Solutions, KEC International, along with Deepak Nitrite and IndiaMart Intermesh. These are the stocks that are trading about 1 to 2% away from their 52-week high. And lastly, we have the multi-bagger of this year, Laurus Labs, which is trading about 2.5% away from its 52-week high.